The 2024 retail apocalypse is actually surpassing 2023 and every year before that, going back over 50 years, folks. This is the worst year for retail closures. Most of you probably expected this, but many of us didn't expect how bad it was really going to be. Now, with the recent closures of several hundred stop and shops, at least they're talking about these closures. Let's take a look at the total here, and we'll see where we're at this year and compared to last year, because last year was pretty bad. Last year was a record year. This year is on pace to beat last year. So it's going to be another record breaking year for something not so good, and that's retail closures. If you like what we talk about on this channel, please make sure you subscribe. Let's go ahead and get into it here. The retail industry is going through a tough time, to say the least, with inflation-wary consumers. I'm just reading an excerpt out of this. Not just inflation-wary. This is my talking here. It's consumers that are up against a wall. 1 in 5 consumers now that have credit cards are maxed out. So of course, we're going to see a big pullback in spending. We see a lot of different retailers announced a weakening of consumers buying things. Some of their profits are still up because the prices are higher, but that's a whole nother story. Prompting change this year. So let me go back. The inflation-wary consumers and a rash of bankruptcies prompting chains, if I can talk, to announce the closures of 3,200 brick and mortar stores so far in 2024. Now, I was going to wait until the end of June so I could be right at the halfway mark, but this was too good to not talk about. Plus, I like to get news out before other channels start talking about it if possible. Not always possible, but that's a 24% increase from a year ago. So not a tiny increase, folks. This is a lot worse than it was last year. And that's according to a report, retail data provider CoreSite. And what they do is they track store closures and openings across the U.S. Although some retailers are planning to expand this year, major chains have announced 4% fewer openings compared to a year earlier. So we have fewer openings and a lot more closures versus last year. So what does that tell you? That tells you that the consumer is in big, big trouble. Not everybody, but it is a big percentage of the population. About 70% of people right now are not able to save up, and a big percentage of those 70%, the big chunk of those, are not only not able to save up, they're going further and further and further into debt as we go along. So there's a lot of people out there hoping for deflation, hoping for an economic crash or correction of some sort, because that's usually when you see deflation. Now, the thing to look out for is the banks and the lending. And we've been talking about the mortgage market a lot lately. If the government can back all these mortgages right now, the lenders that are giving out the most loans are government-backed entities known as non-bank lenders. That's why you haven't seen home prices come down, because the government can literally come in and buy an unlimited number of mortgages from these non-bank lenders. And these non-bank lenders, they issue over 80% of all the mortgages right now. So for those of you, again, that are wondering why the housing market hasn't went bust and why the bubble hasn't went bust, that's why, folks. We have unlimited government backing unlimited amounts of mortgages. And when I say unlimited, the debt that can be borrowed by the government, or some people would call it printed, it's unlimited, folks. There's no limit to it since we came off the gold standard in the early 70s, right? That's so important. And to those of you that have been on this channel, I hate to sound like a broken record, but I still see so many confused people down in comments. What's going on with this housing market? The cost of living, I don't understand it. How can people afford this? Folks, people can't afford it, but they can borrow a lot of money in order to buy overpriced assets. And not just the housing market. Everything that you buy today is overpriced because of lending and people spending money that they don't have, borrowed money. And then to make it worse, it's not just consumers borrowing money. When you have the government backing the debt, or buying the debt, or buying the loans from the banks don't care. They'll just give out more and more loans. That's why you see so many people qualifying for mortgages now. They really shouldn't qualify for them. I know a friend of mine, good friend of mine actually, qualified for a mortgage, had a bankruptcy 2 years ago, bought a $300,000 house. They had to move to Minnesota from California to get a house at that price. But I was kind of shocked, even though I knew banks were doing this. I saw it firsthand with my friend. Filed bankruptcy 2 years ago. A ton of late payments, collection calls before they filed bankruptcy. Banged up credit. I don't know exactly what their credit score was. I'm sure it was in the low 600s though. Qualified for a $300,000 home. So just one example of what's happening right now in the housing market. And folks, that plays out across the economy with credit cards and everything else. Now, we're starting to see the slowdown because people are seeing their credit card debt and they're starting to get scared. One, and two, some people just can't run up anymore because, again, 1 in 5 credit card users are at a brick wall right now, basically, right? So this is very important, and this is no coincidence why we're seeing this many store closures this year, along with so many people being maxed out on their credit cards and the big slowdown in consumer spending. Now, some retailers are doing better than ever. Take a look at Costco. Costco, third quarter earnings beat all key metrics after the stock closed at an all-time high. So Costco's doing really good. And remember, Costco, they started selling gold and I believe silver as well. And many locations have been sold out of gold and silver. You have a lot of people going to real money, sound money, because they see what's happening right now with the massive amounts of debt. Of course, there's always been massive amounts of government spending and government debt, but we've reached levels right now where it's exploding so fast where I think you're going to start seeing even a bigger panic into hard assets and real money, gold and silver. So at some point, we'll talk about silver. Silver is going to be unleashed from the manipulation. Remember, when you see the price of silver go down from $32 to $30 in a matter of a couple days, and in some cases, we see overnight where the price, and this is over the past couple years, we see price drops of a dollar 50, $2, just in a matter of a day or two with millions of ounces of silver being dumped onto the market. Of course, that's not real physical silver, folks. That is a derivative trade, and a lot of times it's naked shorting. So they're manipulating this price with naked shorting, again, because you have money that can be created at the click of a mouse. They can send out shorts on millions of contracts. They can do the same thing in the stock market. But folks, this is so manipulated that I think when you see the real price of silver, when it finally does, when the manipulation does come to an end, maybe we'll see justice at some point to get these people that are actually doing this. When it does come to an end, I think you're going to be probably seeing $500 to $1,000 an ounce silver. I know that sounds crazy, but I think within our lifetimes, and in fact, I think just in the next few years, we'll likely see that finally occur. All right, but anyways, let's get into something else here. Interesting article. This is out of Bloomberg. Here's how they put it: the Fed thinks it's inflation. The Fed thinks it's fighting inflation. Think again. All right, so if Fed funds rate 5.25%, I have to disagree with Bloomberg and how they're assessing it here. This is just an opinion piece. What's his name? Bill Dudley, columnist. I have to disagree with Mr. Dudley. The Fed thinks it's fighting inflation. That's what he says. I think the Fed actually knows that they're not fighting inflation. I think they know that the rates aren't high enough and the banks aren't being controlled enough to stop inflation. If you want to stop inflation, there's a few things you can do. You can raise interest rates even higher, raise them to 10%, raise them to 15%. If the cost of living is still going up, why not raise the rate even more? But two, and most importantly, you have to stop guaranteeing that certain banks are going to be propped up. You have to stop guaranteeing the mortgages out of these non-bank lenders. You have to have the government stop buying these mortgages. If just that were to happen, not even the higher interest rates, if just that second part of it would happen, you would see a massive price correction in the housing market. Housing bubble goes bust. And then just like 2008, the rest of the economy would come down with it. Remember back then, banks stopped lending. Not all of them, but they made it very difficult to get a loan. Now it's just the opposite. It's very easy to borrow money, even with the cost of living at all-time highs, even with home prices at all-time highs. The banks are not pulling back enough on the lending, right? Not many banks are tightening right now. So there you have it. So this headline again out of Bloomberg, the Fed thinks it's fighting inflation. I think they know that they're not winning the war on inflation. But here's the thing. They're afraid to raise rates even higher because so much debt is out there. in the system, amongst the consumers, amongst businesses, amongst the country. We have national debt, and we're paying interest on the debt now, and the interest is more than the defense budget, right? Sounds crazy. It's $1 trillion+ interest now per year, exploding deficits, folks. Many people are saying that this cannot last much longer, that something is going to end up breaking or coming undone, and this whole manipulation money scheme is going to come to an end. Will it happen this year? I think there's a very good chance, but I wouldn't put all my eggs in one basket. Don't bet the farm on it, so to speak, right? Be ready for anything. Be ready for inflation to continue to skyrocket, or if something does break, if something goes wrong, if something the plug gets pulled on this money creation, or the rug gets pulled, plug pulled, rug pulled, whatever you want to talk about it. If something disrupts this massive money monster experiment, then you're going to see it all come down, folks. And could it be the banks are allowed to fail, and maybe they'll say some foreign actor did it, right? Or maybe it was a solar flare that took out the grid and caused all the banks to go down. Who knows? But be ready for it, folks, because I think you're going to be happy that you prepared, and that you're on this channel, knowing the risks out there, right? So everybody keep stacking. Make sure you're subscribed and come back to this channel for more economic/financial news and updates. We'll talk to everybody very soon. Big love. Bye for now and peace.